Trump-Putin meeting, it's nothing but a sideshow for investors. It's all about Netflix earnings. This is your Morning Jolt. I have 3 things you need to know to get your market day started right. I know in market, everybody's looking at the television, looking at Trump meeting with Putin, but it's all about Netflix earnings after the bell. I mean, the stock has been the quintessential bull market stock. It's gone up in a straight line, essentially from the first quarter results, up in a straight line since this time last year. Wall Street has tried to hammer the stock into the earnings, about 3 downgrades and cautious comments into the results last week, but the bottom line is this: the numbers are going to look very strong, but investors should be cautious that even if they report in line, which is likely, I mean, they may get a little bit of a currency hit, the stock will see a violent sell-off on Tuesday morning, but at the end of the day, numbers will be very strong. Probably be another more bad news for cable companies. I mean, more people are streaming. Roku will probably see some action off of these results. Roku's been killing it. I talked to one of my sources last week. They're thinking Roku's average revenue per user is going to grow over 40% this year. That's mind-boggling numbers right there. Veteran tech analyst, you read off my paper here, Mark Mahaney, he did a really interesting survey, almost 2,000 people. In the second quarter, more people watched Netflix versus this time last year. It's a great indicator how strong the results will be. It's just a matter if Wall Street thinks they are enough. Next up, big thought of the day, Apple. Yeah, I know traders, Apple stocks lag in the past 5 sessions on trade war fears, but as the Street's founder Jim Cramer has always said, Apple's not a trade. It is something you own for the long term. You think Warren Buffett, one of most Apple's legendary shareholders, owns Apple for a day trade? Definitely not. So I'm looking at a great note from RBC Capital Markets analyst Amit Daryanani. He focuses on Apple. He's looking at for Apple's services business to hit $50 billion by 2020, can represent about 30% of Apple's business by 2025. Why do you give a damn? Because more recurring revenue. That means more dividends, more buybacks, and hopefully for Apple's case before 2030, they go out and buy a large company. At the end of the day, Apple has a history of not buying large companies or making big transformative acquisitions, more little bets. They buy technology and do acqui-hires. They need a big company. Time to make a splash, Apple. Go out and buy Netflix. She bought it 3 years ago. I'm just saying. Last up, we got around Wall Street. Amazon Prime Day is kicking off. You know, I got my hair cut over the weekend. My hairdresser was like, I'm so excited for Prime Day. So I told her all the stats and all about the stock stuff. She kind of didn't know what I was talking about, but I had to get it off my chest. So the Street's tech reporter, Annie Gauss, great piece on the Street. She thinks Amazon Prime Day may push Amazon's market cap over $1 trillion. It's at $880 billion right now. It's only 13% away. At the end of the day, Amazon is going to add to its over 100 million Prime members, and that's a great business to be in. Recurring revenue, making more money, Whole Foods discounts, great place to be. Next up, bank earnings. Bank of America came out today. Pretty much crushed it. One of the strong results from the space that we've seen right up there with JP Morgan, another actionless purse holding. Bank of America, they crushed on Merrill Lynch. Credit card spending / debit card spending up 8%. Very good numbers there. One of the strongest beneficiaries so far of higher interest rates. The Street's Bradley Kuhn has this really, really amazing feature on banks and how they're having trouble navigating the Trump economy. That's on the Street right now. And that's all I got for you. A lot of stuff in there. Get ready. It's earnings season. Be sure to sign up for the Morning Jolt newsletter down below. I'll see you guys later.